and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the stage to get your stock-related queries answered by our experts. But before that, let's have a look at what the markets are up to. So Cheryl, the first trading day of the week, it's a new energy because it's going to be a truncated week. But nevertheless, the markets are taking it a bit lighter in today's trading session, just flat for Nifty as well as Bank Nifty.
Absolutely, a very good morning to you, Shrishti. And if you look at the markets, yes, we've eased off significantly from the day's highest point when it comes to the benchmark indices. As you can see now, nudging the negative territory. Mid of the day, we did slip into the negative territory, but we managed to bounce back. But now we're trading flat with a positive bias when it comes to the benchmark indices. Let's take a look at what the advanced decline ratio is doing, because for now advanced decline ratio is actually tilted in the favor of the declines. So talking about the declines, you have the metal counters that on JSPL. So you have JSW Steel, that the top loser on the Nifty, with down to about 2.3%. Aichi Motors, SBI Life, Tata Steel as well as M&M are the other set of losers in trade today. While on the flip side, it's NTPC that's holding on to strong gains about 4%. You have Dr. Reddy's holding on to gains about 2.6%. Power Grid, BPCL, Bajaj Auto are the other set of gainers as we speak. Talking about what the sectoral indices are doing and what's this picture there, if you look at the small cap index, that's actually seeing a knock of about 0.5% right now. So take a look at the broader markets and what the picture there is, because I believe the mid cap index is trying to hold on to positive territory, but it's the small cap index that's now down about 0.5% as we speak. While other sectors, if you look at it, power sector is the top sectoral gainer, with the PSE index also is the top sectoral gainer. Pharma holding on to good gains, but on the flip side, this is IT, FMCG, auto that are taking it a bit easy in trade today, Shrishti. So that's the way how the markets are looking like at this point in time. But let's not forget, over the past few trading sessions, there's one particular segment in the entire healthcare space that has been in focus, and that has to be the hospital counters, right? Be it Yatharth, be it Apollo Hospitals, Max, all of them have been in focus, Shrishti.
Well, yes, and today on the Buy Now, Sell Now lens, we are tracking the pulse of the hospital space, because recently there has been a news flow where Supreme Court has come out quite strongly saying that there's a lot of disparity between the public and the private healthcare spends, and if central government doesn't take any step regarding this, then they will go ahead with the implementation of CGHS rates. Now, on the Supreme Court's recent commentary, earlier today we caught up with the managements of Narayan Health as well as Yatharth Hospitals and even Aster DM Healthcare. So let's go across and listen into their views on the same.
The Supreme Court suggestion on capping rates is an impractical suggestion, but the anger is real. The opacity in the pricing structure is real. The impression that a lot of people have that healthcare is expensive is real. Some of these can be addressed, some of these simply cannot. If you look at healthcare costs going up in this country, that is simply a factor of more and more treatments being available. The reason why people are finding it unaffordable is that you can't expect people to pay out of pocket for a lot of things in healthcare. So there are solutions that the industry is willing to propose, but without getting into draconian things like price fixing for everything.
I think in general, regulating price rates in private sector is not the most practical situation, not the most practical solution to making healthcare much more affordable. As far as we are concerned, I think our pricing is already quite less compared to other listed players. We are, having almost pricing of less 20 to 25% cheaper than the likes of other listed players. So for us, similarly on the RPOP side, so for us, it wouldn't make that much of a significant difference, but at the same point of time, regulating pricing and reducing rates and implementing CGS rates, it's not the answer to make private healthcare more affordable. If government really wants to make it much more affordable, there are many ways to do it. But reducing the pricing, that would just lead to hospitals then also compromising on certain aspects. The doctor payout, the doctor's salary, which is quite linked to the volumes that they generate, will also be reduced at the same amount of time. The pricing of lab reagents tests, the diagnostic that comes into play will also we have to reduce then, as well as pricing is also regulated largely by private insurance. So it's not just hospital sector which involves, it's a 360-degree approach where private insurances, pharma companies, diagnostic lab companies, and hospitals will be taken into the account. So that's why it's probably not the most practical solution, but let's see how the government goes about this.
We being a very responsible healthcare player, we do understand where the government is coming from, where why the Supreme Court has come up with this directive. Uh, some kind of regulation is expected. We were anticipating in terms of pricing, but as long as the regulation is within the limit where right now what you see in the private healthcare space is an inflection point. You see a huge penetration of the organized player into the tier 2, tier 3 cities. For example, Aster Group, 70% of our beds are in the tier 2, tier 3 cities. We have only 30% of our beds in metro. This momentum should not be lost. 1A. At the same time, if the price regulation is going to help the patient, Indian patients, or any foreign patients who access our healthcare for making it affordable, and then also access the quaternary and tertiary care facilities in India, what we stand out for in the global market, it's a right move to have. But at the same time, we need to be mindful of the how much are we going to regulate the private healthcare players.
All right, that's the word coming in from all the market players, especially the important hospital segments across India. But how will the standardization of hospital charges affect hospital players, and what are the key points the regulator must keep in mind? Yes, let's hear out Nikunj Dalmia's take, who is the editor-in-chief for ET Now and ET Now Swadesh.
It's a regulation which is easy to flag off but very difficult to implement, and if it is implemented, it is not going to be having a very strong detrimental impact on the profitability of the hospitals. B, the need for quality healthcare will come at a price, and that is something which the regulator should be cognizant of. B, in terms of the big picture scenario, the big picture scenario is very simple. There is more demand and there is less supply. C, the most important one for our viewers, hospital stocks have seen a great run up. These are businesses which will require constant capex, constant upgrades in terms of facilities and in terms of the requirement for healthcare equipment, and the entire profit sharing model which is there with doctors is not going to be having a very large uptick on the margins. So it's safe to assume that the wave of huge margin surge, I guess, in the healthcare sector is behind us, and these stocks are trading at P multiples which are now nearing consumer companies which are growing without capital requirement, but the hospital sector requires a lot of capital. So if you're looking at investing in some of the hospital stocks, you should be a bit wary at the current juncture. If you get a downturn largely because of any regulatory action, that is the time you should be buying it. And then depending on your comfort, whether you like companies which are all India chain-based hospitals like, let's say, a Fortis or a Apollo, or you like doctor-based models which are small but are growing in big cities, that's a judgment call. But there are a lot of models which currently are there when it comes to the entire healthcare sector.
View coming in from Nikunj Dalmia, but let's get on board our experts for today to understand what should you do with the investment in the hospital space. If you're already invested in the counters, then what should be your take? And if you are looking to invest in them, then is this the right price? Because you have a lot of views coming in with a lot of analysts as well. So let me bring on board first Ashish Maheshwari as well as Kunal. Both are very good morning to both of you. Thank you so much, Ashish and Kunal, for joining us on ET Now. And Ashish, while we were taking a take coming in from all the hospital players, most of the hospital players, we also took a view from Incred. And they are of the view that most of these hospital stocks are actually overpriced, given the fact that they are the valuation that they are trading at, it's on par with what the consumption space is trading at. What's your view coming in on that, as well as in the hospital space as a whole? What do you think of these moves? Are they fine? You should look past these moves and look at hospital space, because yes, for a growing country like India, hospital is very essential, isn't it? Healthcare is essential.
I agree with you, and Nikunj has beautifully explained all the aspects with the Supreme Court instructions. But in my view, like this is something like which is in limelight for quite some time, and the government is also not able to sort it out because there's so many moving parts in healthcare industry. And whenever any patient enters, the diagnostic is different, normal OPD is different, and surgery, there are various components. If you see a bill, whenever somebody gets admitted, you see so many heads are there. So how to regulate all these heads will be a Hercules task. I agree, and in my view, this is not going to like something which will get addressed very soon. Even if you see in developed countries where government facilities are different, and private sector always charges premium for medical things. So this is something like which will continue here. As far as valuations are concerned, though these are expensive, but I agree this is a part of now consumption space because more and more people can afford better medical facilities now. And with Ayushman Bharat also up to 5 lakh cover is available for all these individuals. So everybody is able to now afford a better medical facilities. So the valuations are rich, and in my view, this is a sector where very limited options are available as far as listed space is concerned. The valuation will remain rich only, and such downfall, like some stocks have corrected after this news, should be used to accumulate these or hospital stocks. In my view, there's a very bright future of this sector.
Okay, seeing the hospital space having a very bright future. That's the take coming in from Ashish. But Kunal, any stock that stand outs for you within the hospital and the healthcare space? Because in the last week itself, all of these hospital counters were down on the back of the news flow. But any stock opportunity you're spotting at this point?
Good morning.
morning.
Not as of now. I would believe many of these stocks are still going through their phase of correction. So I think they've reached midpoint of a short-term correction. These stocks have corrected by a margin of 10% broadly over the last 1 to 2 weeks. But I believe that they could be at the cusp of at least another 7% to 8% downside, looking at the very recent charts. Because the bounce which had happened for these hospital stocks 2-3 days back was very feeble in nature. It was just a few percentage points bounce for many of these stocks, and these stocks are now on the verge of breaking past below their previous swing lows. So I would believe that that's a sign of weakness. I would not be rushing into the trade as of now. Would wait out for the entire leg of the correction to play out, which means potentially another at least 7% correction broadly into the hospital stocks, and that's where one could look to try and buy these names.
All right, so that's the view coming in from both of our experts when it comes to the hospital space. It's time for a break on this edition of Buy Now, Sell Now. And as Buy Now, Sell Now actually celebrates Women's Day this Tuesday, that is tomorrow, March 5th, we will also want to thank all of our women investors who have been writing to us for both their queries as well as appreciation. And Buy Now, Sell Now will have a special segment on for the women's investors on March 5th. And if you want to be part of this initiative, just send us your photograph, your full name and location to us by the end of the day so that we can actually put a face to all the names that we've been getting. So yes, do write to us with your queries, of course. But on that note, we will actually now slip into a break on this edition of Buy Now, Sell Now. Stay tuned. When we come back, we'll start taking your queries. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the number that's flashing on the side of the screen and the top of the screen. Do remember each time you write to us to mention your name, the stock that you're looking to invest in, mention that name as well. And also mention the buy price and the quantity if you've already purchased the stock and the time horizon, because in that way our experts will be able to help you better. And talking about experts today, we have Kunal Bothra as well as Ashish Maheshwari. And in order to take as many queries as possible, I would request or humbly request all of our viewers to limit your query to at least maximum 2 stocks. So in that way we'll be able to address more queries on the go. Talking about queries, then let me take the first one. This one is coming in from Indu, and Indu has already apologized before I can take a query on air, saying that it's a lengthy one. She is holding 4 PSU banks in her portfolio. One is PNB, the other one is Canara Bank, then there is Bank of Baroda and SBI. All of them, she's seeing gains of approximately 80 to 100%. She wants to thank Kunal and Ashish for that, and she's followed your advice. Now she wants to know the view for the PSU banks in the short term as well as in the long term, if possible. If she were to book out of any one of them, which one she should book out and which part of the financial space she should look to buy instead. So Kunal, let me come first to you and ask you about this. She's making hefty profits in all of these PSU counters currently, looking at the way she's made profit, which means that she has bought at an apt time when it comes to these PSU banking names. Which one do you think she should look out to book out profits, and which other segment of the financial space she should look at?
So first of all, congratulations. I think it's been a fabulous run for the PSU banking lot. My view is that these stocks are still ripe for a much more bigger upside, much more stronger uptrend on a medium to long term scale. I think you've managed to hold on to these stocks over the last 1 year, 2 years broadly. That's what I would probably sense looking at the way the chart patterns for many of these stocks like PNB, Canbank, etc. have shaped up. So I would believe that continue to hold on to these stocks for at least another couple of years. I would believe that these stocks have capacity as well as space to move up significantly higher even from current levels also.
All right, Ashish, what's your take then coming in on the space and also the stocks that Indu has already invested, given the fact that she's making good profits in the long term? Should she stay put with all the four names, or do you think that she should look to exit at one of them and look at other financial names apart from banks?
Yeah, first of all, let me congratulate Hindu for making a lot of money in PSU banks. And in my view, this is a sector which will continue to do well. So, only thing that you can do is slightly tweak your portfolio. That a couple of stocks you can sell out of this and give an entry to SBI here now at 770, because this is a stock which will now try to catch up thoroughly. And in my view, this is a stock which can touch 1,000 rupees also in next 9 to 12 months. Another stock that you can add in the portfolio which you don't have is Union Bank of India. This is also available at around 147, 148, and in my view, this has potential to even touch 200 rupees mark in next 6 months. So you can book a couple of names like PNB or Canara Bank and shift here.
Moving on, and Kunal, the next query that I have is coming from a viewer who is still a student and he wants your advice on two of the counters. His name is Kalyan. He's having 25 shares of JSW Energy as well as Wipro, and the buying price was somewhere between 420 to 426 rupees. He's sitting at a profit in both of these names. Good time to move out of these counters and rather go and invest into NTPC and BEL is his question.
See, if you ask me relatively, yes, then I think NTPC, BEL, they would probably fare a lot more better because of the sector, the peer group, stocks, how they are performing. But I would believe that the charts for Wipro also is looking very attractive. So I would probably suggest that hold on to the stocks which you already have, the two names which you've already mentioned and bought at closer to 400, 420 levels. But only if you have extra capital, or maybe if you can if you have surplus capital, only then it makes sense to buy these PSU names, NTPC as well as BEL.
All right, this one is coming to Siddharth, and Siddharth is writing to us for the third time. Very sorry, Siddharth, we've not been able to take your query earlier. He's writing to us from Bangalore, and he's a huge fan of you, Kunal. He wants a technical review on Saturn Credit Care as well as Sula Vineyard for a period of 6 months to 1 year. He's saying Sula has corrected over 15% despite the brokerage reviews being upbeat, also the recent VAT rebate as well. So he wants to know what sort of a strategy should he adopt with both of them. I'm unsure if he's invested in both of them, but if he's already invested, what should he do? And if he's not invested, then what should be his strategy in these counters?
So I think Sula could be a better chart compared to Saturn Credit Care. Of course, both of them are different sectors, but just comparing the charts as such, then I believe Sula could be a better play over here. The stock has limited history, just about 1.5 odd year of price history for the stock. But then looking at the price history over the last 1 year also, the stock seems to be more trending in nature. I think except for the recent leg of correction, broadly the stock has gone through a time-wise correction. But I think 500 seems to be an important base or a support just closer to the 500 level. So you can start buying at current levels if you have not bought, and I think close to 500 is where you can look to add or accumulate more.
All right, moving on then, and Ashish, the next query that I have is coming in from Shayak Banerjee from Bangalore, and he has 30 shares of PM Industries from a price of 2,324 rupees. We are seeing all of these auto ancillary names doing fairly well in the recent past. What will be your advice to for this counter, and he wished to stay invested for the long term?
Yes, I think you can continue to remain invested companies consistently delivering also almost 40, 41 crore profit they are making every quarter. And the lamps which they make, which goes in like all these two-wheelers and four-wheelers and headlight, tail light. So they're having a dominant position also. And the way this sector is growing, I think FAM will continue to grow. And another good thing I like about the company is a debt-free company. So in my view, you can remain invested, though slow and steady, but this will stock has potential to even touch 1300 to 1400 mark in next 6 months.
But Ashish's buying price is quite high, so would you advise to go ahead and average this particular name as well?
I think the stock touch high of 1300 rupees, and if he has bought almost at that price, then surely you can average out also.
Right. The next query that I have is coming in from a viewer, that is Pankaj, who's writing to us from Pune, and he has about 529 shares of AB Capital at a price of 106 rupees per share. He's one of those lucky investors who's already booked profits on the 25% of the quantity when it comes to AB Capital. Kunal, you are bullish on the stock. Now he wants to know what's your short-term target and if he can hold on to this particular counter for the next few years. And it's not me who's saying that you're bullish on the stock. The viewer has noticed that you're bullish on the stock.
Yeah, I think you can get more luckier if you can hold on to it for another couple of years. I would believe that the stock looks fairly attractive. So I think it's a good price where you've bought at 106 levels for AB Capital. The stock had just neared the 200 levels, but from there the stock went into a 5-month correction. And I think it's making a very strong comeback so far this quarter. For the last 1.5 odd month, the stock is up almost 15% from the recent swing low. So that itself indicates the kind of resurgence the stock is showing this year. I would believe that the 200 level should be broken past above for AB Capital, and the stock can chart on to the strong uptrend after that phase of a pause for 5-6 months where the correction stopped out for AB Capital. So very bullish on the stock over the medium to long term play. I would believe that you should hold on.
All right, moving on. And Ashish, the next query is from PR Bhuyan from Kolkata. He has 600 shares of Huhtamaki PPL from a price of 235 rupees, and he says that for the last several years he's been holding this particular stock. Though he's in returns, he's having decent returns in this one as of now. But is this stock worth holding in the portfolio, and what will be your advice?
Stock actually, if you see the performance wise, it's again a slow and steady stock with a very limited set of volume. But fundamentally, company is good into fintech technology, and the way FMCG companies are growing, I think this is a proxy play to FMCG companies primarily. So my suggestion will be to remain invested. Again, MNC companies, debt-free companies should do well over a period of time.
All right, so that's the take coming in on Huhtamaki. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now by ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, which is a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month. Which means we will be celebrating Nivesh Day tomorrow. So join ET Now Swadesh and Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And the next query that I have, Kunal, is coming from Mahesh, and this one is specifically for you. He wants an advice on Viatech Babak. He's holding 300 shares from a price of 354 rupees. Will that be a hold or exit?
I think it should be a hold. The stock has come out of a major correction. I think 2015-16 top of 950-60 for Vatek Wabak towards a point in 2020 when the stock was sub the 100 levels, and now it's come back towards the 770, 740, 750 mark. So which means that the stock should be good for a retest of the previous highs of 900 plus. So I believe possibly in the next 2 years, if you have that kind of a time horizon, if you can hold on to it for that kind of a time horizon, I would suggest you can look out for targets in the excess of 900 plus for Vatek Wabak.
Okay, the next one is coming from Devashish. She's writing to us from Kolkata. This one is for you, Ashish. She has South Indian Bank, about 1500 shares at a price of 32 rupees per share. He wants to know, is it advisable now to go ahead and book losses in South Indian Bank and instead look to invest that money in NBFCs like Shriram Finance, or for the matter of fact, Poonawalla FinCorp for a period of about 2 to 3 years? What's your take coming in on this? South Indian Bank looks like he has actually, in fact, invested at an elevated level when it comes to this particular counter. Fundamentally, makes sense to shift out of this and instead park your money in NBFCs?
Yes, I think post right issue also stock is slightly under pressure and not going anywhere. So instead of this, I would direct play on NBFC will better bet. And Aditya Birla Capital is my pick number one here, where he can invest funds. Otherwise, Muthoot Finance also looks good. So these two picks from my side. I think time to exit South Indian.
Moving on then, and Ashish, once again coming to you, Narayan is holding 40 shares of Jindal Poly Films and his buy price is 800 rupees is what he's saying. Though he's a long-term investor, but what will be your advice? Should he continue to hold on to this particular name? The 52-week high, as per se, that I could see is around 749 rupees. What will be your advice in this one?
See, Jindal Poly, as far as this stock is concerned, again, underperformer stock. If we see 500 to 750 is the range in which the stock is moving. And one problem in this sector is there's oversupply in this sector. So even if you see the leaders' performance like Polyplex or Uplex, none of these stocks are also going anywhere. So ditto for apply for Jindal Polyfin. So my suggestion will be to exit from this stock and switch to some again PSU stock which can give you better return, or even contemplate to invest even a stock like Tata Power or NTPC which can give you better return than Jindal Poly.
All right, this one is coming from Srinivas. He's writing to us from Chennai. Kunal, this one is for you. He has two counters in his portfolio. One is IRFC and the other one being is IOC. So for IRFC, his buy price is around 156. IRFC, his buy price is around 156 rupees per share, 400 shares of that particular counter, while for IOC his buy price is around 177 rupees per share. If you look at IOC, I believe it's at an elevated level compared also for IRFC. What should he do now?
Well, I think you can just continue to hold on. I would not suggest to average more because the stock still seems to be getting into, both these stocks are still not completed their corrective phase. So I think both IRFC and IOC, I think I've seen a correction of more than 15% if I'm not wrong. IOC was 196, had corrected to 160, 164 levels, seen a mild bounce back. IRFC also, I think in terms of magnitude, the stock has gone through an excess of 20-25% kind of a correction from its previous swing highs. So I believe that both these stocks are due for one more round of correction. We should not be in a hurry to try and average out further. I would believe that wait out for a phase of correction, say over the next 1 month to 2 months, you could probably get these stocks into a corrective phase, and that's where you can look to buy or add more.
All right, moving on then, and Ashish, one of the stocks that is in focus today is Z Entertainment, yet again on the back of a con call at 8 p.m. today, and Ramesh has bought these shares from a price of 190 rupees. What to do in this one? Would you advise to average at these levels? Should he continue to hold on or move out?
Now the stock has been already trading as a near 52-week low. So I'll not suggest to exit at this price point. As far as average is concerned, I think you can always do it, but there should be some clarity what is going to happen now with their merger with Sony. If it's not happening, what is the company's strategy on a standalone basis also? And this is the reason market is still nervous and is still at 52-week low. Buying is not forthcoming. So my suggestion will be to wait for purchases and let there be clarity on their future plan of action. Then only you should buy.
From Ashok Kumar, he's writing to us from Mumbai. He wants to know what's the outlook on IDFC First Bank, Ashish. He has about 1,000 shares purchased at 65 rupees per share. He wants to know the outlook for the long term, say up to 5 years. How does IDFC First Bank look to you? Or do you think that he should switch to some other bank to make better returns?
See, IDFC First Bank, only the problem is the way other private sector banking stock moves, it doesn't move. So it's stuck up in a very narrow range of 78 to 88 and it hovers in that only. So 5 years is a good time frame to hold these stocks. But only thing is if you are looking at a shorter term horizon, then maybe Axis Bank or ICICI Bank or even RBL Bank fits the bill where which can give you much better return. Maybe 5 years is a good time frame, but it will move very slow and steady.
All right, that's the advice coming in on IDFC First Bank. But as Buy Now Sell Now celebrates Women's Day this Tuesday, that is March 5th, we also want to thank all of our women investors who have been writing to us for both their queries and our appreciation. Buy Now Sell Now will have special segment on its women's investors on March 5th. And if you want to be a part of this initiative, just send us your photograph, full name and location to us by the end of the day. Happy Women's Day in advance to all our investors watching out there.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And just a quick reminder once again for all of our viewers, Buy Now, Sell Now will be celebrating Women's Day special this Tuesday, that is March 5th. That is tomorrow. We also want to thank all of our women investors who have been writing to us for both their queries as well as for our appreciation. And we will have a special segment on the women investors on March 5th. So if you want to be a part of this initiative, just send us your photograph, your full name, location and also your query by the end of the day so that you can feature on the Women's Day special episode that will be tomorrow, that is March 5th. Alright, and with that, let's kickstart taking all of your queries in rapid fire. We have Kunal and Ashish, and let me take the first one. Kunal, this one is coming in from our viewer from Durai, from Chennai. NCC 1000 shares at 160 rupees per share for the next 6 months. Makes sense to add some more in his portfolio?
Yes, you can look to add at current levels also.
Okay, Kunal, what will be your advice on L&T? Sitaram is holding the shares from a price of 1911 rupees. Can you go ahead and buy more at current market price?
Wait out for a mild correction, maybe closer to 3,550, 500 levels could be a better bet.
Alright, this one is coming in from Krish. He's been writing to us pretty often. This one is for you, Ashish. He has both Varun Beverage as well as Godfrey Phillips in his portfolio. He believes that these were your top picks. He wants to know, Ashish, should he continue to hold on to them despite the run-up, or what should be his strategy?
It doesn't matter if the stock is good, they should be chased more. So, Varun Beverage and Godfrey Phillips both are hold.
Okay, Ashish, what would be your advice on Tata Chemicals? Sandeep is holding the shares from a price of close to 1,000 rupees. Any targets to look out for? He's a long-term investor.
I'm afraid this will be a good bet now. Instead of this, you shift to Tata Consumer Product, which can give you better return.
Amit from Jaipur wants to know about Kajaria Ceramics. Kunal, 50 shares at a price of 1,280 rupees per share. Do you see a scope of upside for the next 1 year, Kajaria Ceramics?
Unless the stock breaks past about 1320, you should not look to add. Only about 1320 is where you should look to add.
Okay, Kunal, what will be your advice on Bata India? Saji is holding 250 shares from a price of 1,480 rupees. Any medium-term target?
You can continue to hold on. I would believe that the stock should see a quick revival. Closer to 1550 is where I would expect a target for Bata.
Okay, this one is coming in from Ved. He has VIP. He wants to look to buy VIP. Doesn't make sense fundamentally to go ahead and buy this particular counter right now. Ashish, what's your take on VIP?
No, I'm not a big fan of VIP. If you want to invest in the same sector, then Safari Industries is a better bet.
Okay, Kunal, what will be your advice on BEL? Balakrishna wants to know, is this the right time to enter BEL?
Well, yes, I think at 200 plus levels, it's a good time to enter the stock.
Alright, and with that we come to the end of the rapid fire as well as the queries. Thank you so much, Kunal, as well as Ashish, for joining us on the show and taking our viewers through all the taking our viewers through the hospital space as well as resolving the queries. And viewers, with that, we are totally out of time in this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself and the team that put the show together. And let's not forget, tomorrow is the Women's Day special, so do write to us and send us your picture as well. But with that, we are signing out for this edition today. Thank you for watching.